Hey, what's up, my friend? Welcome back to this week's market analysis, or rather, welcome myself back to this week's market analysis. So, for those of you who email me and say, hey, Rainer, is anything wrong? I haven't heard from you for the last couple of weeks. Where are you? Well, I was back in the army for 9-10 days for my annual in-camp training. For those of you who are in Singapore, you know, right, the guys, we have to go back to the army once a year to serve our in-camp training, right, to make sure we don't forget our soldiering skills, right, to make sure that we are still so-called operationally ready, right. So yeah, that's what happened to me over the last couple of weeks. I was back in camp. So I came out this week and it's good to be back, right? Back to the markets and back to interacting with you, right? So back to this week's market analysis. I want to talk about the euro dollar first and foremost because this is a market that I've seen traders, saying that, Rainer, is this a good time to short? Hey, Rainer, how do I, trade this market? It's so trending. So I want to talk about this on how, I'm in this trade and what I do to enter the market and manage my existing position. So that's the first thing. And the second part of it is I want to share with you this market which I think is ready to break out higher. And I want to talk about how I'm looking to trade this particular market. So all this and more in this week's market analysis. I'll see you there. Okay, so before we begin, I just want to share with you, right? Because I always get this question from traders asking me, hey, Rainer, can I learn more about your trading approach, your trading methodology? And I always refer them back to my website, tradingwithrainer.com, right? Why is that so? Because on this website, this page itself, I have written trading guides to help you get started with your trading, right? For example, I highly recommend you get the ultimate trend following guide because this is one of my core trading approach, which is riding trends across the different markets. And in this guide, I share with you step by step, right, the principles behind it, why it works, and a simple trading strategy on how to ride trends across the different markets. So just click this blue button, enter your email address, and I'll send this guide directly to your email. No credit cards required whatsoever. Okay, so with that, let's move on. So in this week's market analysis, right, the first market I want to talk about is euro dollar. So for those of you who have been watching, these kind of weekly videos for a few months now, you know that, euro dollar, there was a setup that I shared in the weekly videos at this point in time over here, right? If you just go back in time, right, let me explain to you why I went long, right? So this is for those of you who weren't here at that point in time, right? And for those of you who already know, right, this is just a brief recap. So first and foremost, right, I was looking at this level or area, if you want to call it, right, an area of resistance. And I noticed one thing, strikes out to me, right, is that, previously the market tests this level, get rejected quickly. Then it comes into this level again, gets rejected quickly, comes in, gets rejected quickly. Right, so it's telling me that there is strong selling pressure at this area. If not, price wouldn't have get rejected this quickly. But on the fourth time it come in, something interesting happened. It get into this area of resistance and it didn't get rejected. Instead, it starts to get accepted. Why is that? Because if you think about this, right, if the market wants to reject higher prices, it wouldn't be consolidating at this highs. In fact, it's forming what I call a build-up, meaning it's forming a somewhat of a very tight range. Okay? So when usually this happens, it's telling me that the market is accepting these higher prices. So if the market does break out, I want to be long. And on top of it, right, I am trading with the trend because I define the trend as this 200 period moving average over here. So I look to go long only if the price is above it, and that happened. So these are the two main reasons, combined together on why I went long on this euro dollar setup. So basically when price break and close above this highs, I got long. My stop loss was or is 1 ATR below this low over here. Right, so 1 ATR below is somewhere about here. So as you can see, right, this happened to be one of those trades that went for a large winner, as the market just took off, and the retracement are all pretty slight, right? Nothing too deep. So how do you actually trail your stop loss on this trade? So trailing your stop loss is there's really nothing magical about it, right? I would say the secret to it is to be consistent in your approach in trailing your stop loss. So for example, you could use the 50 period moving average, like this blue line over here, and exit only if the market closes below it. So as you can see, the moment you enter, right, the price didn't even come close to this 50 period moving average, and you would have been in this trade till now. Alternatively, if you don't want to use a moving average, you can use something like structure of the markets, right? You know that the trend consists of, higher highs, higher lows, right? These are all the higher lows in the trend. Again, what you could do is to reference these lows, right, to set your stop loss, right? So for example, I see this is a swing low, a swing low, a swing low. So perhaps what you can consider is to only exit your trade if the market exits, right? Or rather, trades beyond this swing lows. Maybe if it breaks and close below it, then you exit your trade. So either way, right, you would still be in this trade. So I would say the secret to, riding big trends isn't really in the magical technique in trailing or stop loss, but rather it boils down to your consistency and the willingness to hold your trade, right? That's the biggest secret, right? Otherwise, right, the trailing stop mechanism, there are, dime a dozen out there, right? It's really a matter of, being consistent in your approach and having the willingness to trail your stops. Okay, so with that said, moving on, I want to share with you, right, a losing trade that I had. All right, because, in trading, you have your winners and you have your losers. So just want to share with you a loser that I had. Okay, so over here, right, scroll back in time, you can see that this is the chart of coffee. I'm sure most of us, we drink coffee every day. So this coffee is clearly in a downtrend. Why is that? Because the price is below the 200 period moving average. Well, at least, I'm referring to at this point in time. So this was the area of, this was the level I'm looking at, right? Previous support, then resistance, then resistance. So when this market break and close above resistance over here and above the 200 MA here and here, there is only two things that could possibly happen. And it's always at the back of my mind, right? The first thing is this. It is real. It is a real breakout. The second thing that is another possibility is that it's a false breakout. So these are always the two things at the back of my mind. And I would have different plan for different scenarios. So if this is a real breakout, then I would, possibly look for a breakout of a retest of, perhaps previous resistance turn support. If it's a false breakout, right, then the market has to close below this level to warrant me for a short trade. And this is what happened, right? The market did close below this area of support. So this warrants a short trade for me. I had my stops somewhere about here, above this highs around here to give it some buffer. And what happened next is that the market just straight away, hit my stops, right, and took me out of the trade. And then it collapsed all the way back lower. So at this point in time, traders may think, right, hey, Rainer, they would say, you shouldn't put your stop loss at all, right? Because look what happened, the market went back in your favor, right? Putting a stop loss is stupid, it's silly, right? Look, you had a loss for nothing. Well, that is true. On hindsight, having a stop loss on this trade proved to be a poor choice. But we are not trading on hindsight. This is the message I want to bring across. We are not trading on hindsight. We are trading the then and now. And what if the market didn't reverse at this point? What if the market, instead of reversing, it did this? It continued trading higher, higher, higher. And you don't have a stop loss. What's going to happen? I can be sure that you probably lose a huge chunk of your account or your entire account. And so this is why we always have a stop loss in place. Especially for, the retail way of trading. Whether you're, a day trader, swing trader, or position trader, right? You always have a stop loss in place because you just never know what the markets can do. Fair enough? Okay, so this is the coffee trade that I took. I had a loss on it, right? No biggie, right? And it's time to move on. And this one is a market I really want to share with you because I think, there's really a nice setup that is forming, right? And it could be a big move in the coming days or weeks. So if you look at this is the Treasury, I think I want to look at the 10-year, the 10-year Treasury note. If you scroll back a little, you can see that this market, sometime in March till November, had a massive sell-off, this portion over here. And then it went into a range, which is constituted by this range over here. So what I'm looking at is based on pure structure of the markets, the next level, if it does break out, the next level that it could retest is here. Right, this is the next key level, and followed by this minor one over here, and then this major one over here. But whatever the case is, it's looking bullish at this point in time. Why? Couple of reasons, and the reasons are similar to the euro dollar trade I just shared with you. First and foremost, price is above the 200 period moving average, and as you know, if the price is above it, I want to look for long setups only. Second reason is this. Look at this over here. Is this familiar as the euro dollar trade you saw earlier? What is this? This is a build up, right? I call this a build up, right? Where price goes into a tight range. And this to me is a sign of strength. In fact, if you look at the price action, you see a series of higher lows coming into resistance. So what does this tell you? It tells you that the buyers are willing to buy at higher prices. So this to me is a sign of strength. So there are a couple of ways, two ways you can trade this potential setup. First and foremost is a very straightforward break and close above the high. So if the market breaks and close above this highs over here, you can look to get long, right? And have your stop loss, let's say, somewhere here. Alright, give it some buffer. You don't just put it at this low because it's very easy to get spiked out, stopped out of the trade, and the market continues trading higher. So this is the first straightforward setup on the daily time frame. Very suitable for those of you who don't have time to monitor the markets. The alternate way to trade it is on the lower time frame, the 4-hour time frame, because what you're seeing over here on the 4-hour time frame is a different set of market so-called structure. You can see different support resistance, highs and lows, etc. So what I'm looking over here is this level of support. If you see this, right, if the market can come down lower and do a false break and then close higher over here, I'll be looking to get long on this price rejection in expectation that the market will break out and continue trading higher. So these are the two things that I'm looking for on the 10-year Treasury note. Right, the first one is just a simple, straightforward breakout, and the second one is a price rejection on the 4-hour time frame. So maybe let's just cover one more market before we conclude today's video. Right, how about the crude oil? So crude oil, again, if you just scroll back and see what's the big picture, you can see that it's pretty much in a range, right, between the $56 and around the 42, 43 level mark. What I'm seeing down here is a potential inverse head and shoulders. Right? It's a bit hard to see because it's quite compressed. But if you look hard enough, it is there, the inverse head and shoulders pattern. Right? This is a sign of strength again. Right? If you go down to the 4-hour time frame, it's much clearer. Right over here, you can see right here, here, and here. So how can you trade this this chart pattern? Right? Again, what I will do is again mark out your support resistance level. I would say this is a level to be paying attention to. So if this market comes back down and retest and get rejected, right, I'll be looking to go long over here in anticipation of higher prices. So at this point, right, many traders who trade head and shoulders pattern, what they'll do is they would wait for price to break out of this so-called neckline and then they get long, right? It's not wrong, right? But if you want to enter earlier, right, and still have a place where you can define a proper stop loss, then this will be a better level to trade off. Okay, so these are just something for you to think about and see whether this type of trading approach suits you. So yeah, that's all I have for you in this week's market analysis. Just to do a quick recap to what we've covered, I mentioned about euro dollar, right? Why I was bullish and how a couple of ways you can actually trail your stop loss on the euro dollar trade. Then we move on and talk about coffee. Right, how I got stopped out of this coffee trade, and I mentioned to you, why it's a perfectly normal trade, even though the market did eventually went in my favor. But you always want to have a stop loss on each and every trade because you just never know what the markets will do. Then I mentioned to you the trade that I think is really exciting is the 10-year Treasury note futures. Right, it could really break out and move higher over the next few weeks. And the last one we spoke about is the Brent crude oil, which is the chart that you're seeing right now, and inverse head and shoulders potential trading setup. So, okay, that's all I have for you in this week's market analysis. And, just one last thing to talk about is I received a comment from a subscriber. Can't exactly remember who that is, but they say, hey, Rainer, you have been, I think it's along the lines of I cannot stand your alright, your right, words in your speech. Because if you have been watching my videos, you know I tend to say alright, right, alright, right, alright. Yeah, it's a habit. And I have taken that into consideration, and I'm trying to work on it, right? So there, I went again. I try to work on it and try to improve my speech, right? It's a habit. It takes time, right? It's not easy to just get rid of it overnight, right? If you read the book, I'm not sure what's the name of the book. I think it's something like it's a yellow book about talking about habits. You take at least 3 weeks to form a new habit. At least 3 weeks, right? So it's like having to call your mom for the last 30 years. And say, for example, one fine day, you're not supposed to call her mom. You're supposed to call her by her first name. Maybe it's Cindy. Hey, Cindy. Can you do it immediately? Of course not, right? It takes time to build that habit. So, I'm trying to work on it, right? Give me some time. I'm trying to reduce the number of alright that I have in my speech, right? Hopefully, I can improve on this. So we shall see how this goes. Alright? So with that said, right, I wish you good luck and good trading. If there's any feedback or comments, just let me know below and I'll get back to you. With that, I wish you a great trading week ahead and I'll talk to you soon.